This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were stable on Monday as investors weighed up uncertainty over trade talks between the U.S. and China, clouding the outlook for global growth and fuel demand, as well as the prospect of OPEC Plus raising supply. Brent crude futures were down 13 cents, or 0.19%, at $66.74 a barrel, as of 09:02 GMT. U.S. West Texas Intermediate crude shed 12 cents, or 0.19%, to $62.90 a barrel. Brent futures rose marginally in the previous two sessions, but nonetheless marked a week-on-week decrease of over 1% on Friday on concerns about the impact of tariffs on the global economy.
The world's biggest oil exporter, Saudi Arabia, may slightly increase its crude prices for Asian buyers in June for the first time in 3 months, tracking gains in benchmark prices this month, refiners said on Monday. The June official selling price for flagship Arab light crude may rise by 10 to 30 cents to $1.30 1.50 a barrel from the previous month, 4 Asian refining sources said in a Reuters survey. The producer cut its May prices to close to their lowest level in 4 years, after the OPEC Plus agreed to advance their plan to phase out oil output cuts by increasing output by 411,000 barrels per day in May, 3 times more than the group originally planned.
Moving on to the top news in the energy sector.
Supplies of liquefied natural gas, LNG, from the United States to Europe will continue to grow, U.S. Energy Secretary Chris Wright told Reuters on Monday during a visit to the Polish capital Warsaw. The U.S. supply will continue to grow in a meaningful way. There's a lot of dialogue about contracts, Wright told Reuters on the sidelines of a conference in Warsaw. I think we will absolutely see more offtake agreements for LNG from the U.S. in Europe. Wright declined to comment on the possibility of Russian energy returning to Europe, and said the energy situation on the continent would be determined largely by Europeans.
Analysts have cut forecasts for prices in the European Union's carbon market for 2025 after benchmark contracts fell this year, mirroring losses in gas and equity markets as tariff announcements from the United States stoked fears over economic growth. The EU's emissions trading system is Europe's main tool for curbing emissions. Under it, manufacturers, power companies and airlines need to buy a CO2 permit for every ton of CO2 they produce. EU allowances are forecast on average at €70.54 a metric ton for Q2 2025, the Reuters survey of 10 analysts showed, and 74.89 for 2025, down 7.7% and 3.4% respectively from the forecasts made in January. Next, we have the top news in metal markets. Copper prices held steady on Monday as the market waited for further developments on U.S. China trade relations and for clues to demand prospects in China, where growth is under pressure from U.S. import tariffs. Benchmark copper on the London Metal Exchange was nearly unchanged at $9,376.50 a metric ton by 10:35 GMT. U.S. President Donald Trump insists there has been progress with China, and that he has spoken with President Xi Jinping. However, Beijing has denied trade talks are occurring, and on Sunday, Treasury Secretary Scott Bessent did not say that tariff talks were underway.
Iron ore futures prices fell on Monday, weighed down by the likelihood of China cutting crude steel output, although losses were capped by a continued rise in demand for the steelmaking ingredient. The most traded September iron ore contract on China's Dalian commodity exchange ended daytime trade 0.49% lower at 710 yuan and 50 fen, $97.32 a metric ton. The benchmark May iron ore on the Singapore exchange was 0.18% higher at $98.06 a ton, as of 07:05 GMT. China's biggest listed steelmaker, Baoshan Iron and Steel, said a nationwide output cut was likely this year.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures closed lower on Monday, weighed down by expectations of increased production, while weaker Chicago soyoil also pressured the market. The benchmark palm oil contract for July delivery on the Bursa Malaysia Derivatives Exchange fell 2.37% to 3,961 ringgit, $908.49, a metric ton at the close. Crude palm oil futures declined following weakness in the Chicago soybean oil market and anticipation of higher output in the coming weeks, said David Ng, a proprietary trader at Kuala Lumpur-based trading firm Iceberg XSDNBHD.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.